In recent weeks, the global cryptocurrency market has experienced a marked phase of correction, a natural but often painful process, following a prolonged period of rapid price increases. This downturn has not been limited to Bitcoin, the flagship cryptocurrency, but has broadly affected a wide spectrum of digital assets, including Ethereum, Ripple, Cardano, and many others. After a strong rally in the first months of 2025, characterized by record-breaking highs, increasing institutional interest, and growing mainstream adoption, June, Bitcoin, as the dominant player in the crypto ecosystem, often serves as a bellwether for the entire market. The cryptocurrency reached unprecedented heights earlier this year, climbing above 110,000 USD, fueled by a mix of factors including growing acceptance among major corporations, favorable regulatory developments in some regions, and renewed interest from institutional investors. However, as June unfolded, Bitcoin's price experienced a sharp pullback, dropping to around the psychologically critical level of 100,000 USD. This level is widely viewed as a major support zone. Its breach or sustained hold can heavily influence market sentiment. Several factors have contributed to this volatility. Notably, there has been a discernible outflow of capital from Bitcoin exchange-traded funds, ETFs, signaling that some institutional investors are choosing to reduce exposure amid rising economic uncertainties. Global economic factors such as increasing interest rates, inflation pressures, and geopolitical tensions, ranging from trade disputes to conflicts, have tightened risk appetite across all financial markets. Bitcoin, despite its reputation as digital gold, remains a highly speculative asset, sensitive to shifts in broader market sentiment. Technically, Bitcoin's recent price movements have broken through several key support levels, including important moving averages and trend lines that traders use to gauge momentum and strength. This technical breakdown has triggered stop-loss orders and forced liquidations, intensifying selling pressure. At the same time, Bitcoin's volatility index has surged, reflecting heightened uncertainty and trader nervousness. Ethereum, the second-largest cryptocurrency and the foundation of much of the decentralized finance, DeFi, and non-fungible token, NFT ecosystems, has followed a similar trajectory. ETH peaked near $4,500 earlier in the year, buoyed by the successful implementation of the merge upgrade that transitioned the network from a proof-of-work to a more energy-efficient proof-of-stake consensus mechanism. Being a relatively nascent and volatile asset class is particularly vulnerable to such macroeconomic shocks. Despite these headwinds, many industry experts and analysts maintain a cautiously optimistic outlook. They argue that market corrections are a healthy part of the maturation process for cryptocurrencies. By pruning speculative excesses, corrections help establish more sustainable price levels and reduce bubble risks. Moreover, the technological foundations of leading cryptocurrencies continue to strengthen. Blockchain adoption is expanding in sectors such as finance, supply chain management, gaming, and digital identity. Regulatory clarity, although uneven across regions, is gradually improving, which may foster greater institutional participation in the future. Investors looking forward should pay close attention to a variety of indicators. Technical analysis remains important for timing entry and exit points, with critical support and resistance levels serving as guideposts. Macro factors such as interest rate decisions, inflation reports, and geopolitical developments will continue to influence sentiment. Perhaps most importantly, progress in blockchain technology, ecosystem development, and regulatory policies will shape the longer-term trajectory of cryptocurrencies. In conclusion, the recent decline across the cryptocurrency market, from Bitcoin to Ethereum, Ripple, Cardano, and beyond, is a complex event driven by a mixture of technical, economic, regulatory, and sentiment factors. While the short-term environment is challenging and marked by volatility, it also presents opportunities for disciplined and informed investo guys. And if you want to be more informed, go to www.blockchainlearning.com blockchaindudes.com. This event was a major milestone intended to reduce Ethereum's environmental impact and lay the groundwork for future scalability improvements. Despite this technical success, Ethereum's price has been less resilient, falling by approximately 15% to below $3,800 amid the broader market sell-off. The reasons are multifaceted. Uncertainty around the timing and effectiveness of subsequent upgrades like shard chains and Ethereum 2.0, a cooling of speculative enthusiasm in DeFi sectors, and general market risk-off sentiment. Additionally, as some DeFi protocols face regulatory scrutiny and competition from alternative blockchains, investor confidence has wavered. Ripple's XRP, known for its focus on cross-border payments and partnerships with financial institutions, is heavily impacted by its ongoing legal battle with the U.S. Securities and Exchange Commission, SEC. This lawsuit, which alleges that Ripple's initial coin offering constituted an unregistered security sale, has created significant regulatory uncertainty. While there have been sporadic positive developments that led to brief price upticks, XRP remains under pressure, having declined by nearly 10% from May levels. The resolution of this legal case is widely anticipated to be a defining moment for XRP's future. A favorable ruling could open doors for increased adoption and partnerships, while a negative outcome might restrict Ripple's operations and dampen investor enthusiasm for the token. Cardano, ADA, celebrated for its academic approach and commitment to building a secure, scalable blockchain infrastructure, has also faced challenges in the current market environment. Despite important network upgrades and the launch of smart contract capabilities, ADA's price dropped from around $1.60 to below $1.30 in recent weeks. This decline reflects a general reduction in speculative investment as market participants await more significant real-world adoption and high-profile partnerships. Investors appear cautious, hoping for concrete use cases that demonstrate Cardano's value beyond theoretical potential. The broader market correction can be attributed to several interrelated factors. Rising global interest rates have made borrowing more expensive, reducing liquidity available for riskier assets. Inflationary concerns continue to weigh on investor psychology, pushing capital towards safer investments. Furthermore, geopolitical events such as ongoing trade negotiations, regional conflicts, and regulatory crackdowns in various jurisdictions contribute to an atmosphere of uncertainty. Cryptocurrency.